Hello and welcome to this week's live weekly trade plan, where we go through the financial markets and we look to identify weekly and monthly levels of support and resistance that we're going to be looking to use in the trading week ahead. But just before we begin this webinar, I would like to present a very exciting opportunity to you personally. So the Live Trade Room has been set up to offer traders comprehensive trading education, but most importantly, daily mentorship. So our traders can join us for 1 hour per day where we analyze the financial markets, we look to identify trading opportunities, and you can observe us trade our own live trading account. So the idea behind this is that you'll be able to get full access to our trade details but most importantly, our trading performance. So I'm delighted to say that we are currently accepting applications for places on our Trainee Traders Programme. Now please do click on the link below if this is of interest to you and you can find out exactly what's involved and what we're offering. Now for a limited time only, if you are successful in your application, we are going to be waiving the fees associated with a place on our trainee programme. So there is zero cost associated with a place and there is no potential for upselling or anything of that kind at any point. So this is a genuine opportunity, however it is subject to normal terms and conditions. So what we are looking for is genuine traders that are genuinely interested in learning how to trade the financial markets. So if this is of interest to you, please do click on the link below, do submit the relevant form and one of our traders will be in touch with you over the coming days. So for now, relax, enjoy the rest of this webinar and we look forward to seeing you soon. Bye for now. Good evening everyone and a very warm welcome to our live weekly trade plan. This is Sunday the 5th of November. My name's Tim and I shall take you through tonight's webinar. Apologies, we are starting a few minutes late this evening, so I hope I haven't held you up too much. So let me tell you what this is all about. This is a 60-minute live webinar. And it's all about multi-time frame analysis. Obviously, while the markets are closed, this is particularly important as it allows us to take stock of what is happening to price and therefore enables us to plan ahead. So what we'll be doing is we'll be looking to take a technical look at weekly and monthly timeframes and look to identify the important highs and lows and of course the genuine levels of support and resistance that we can use in the trading week ahead. So with that in mind, let's start as we normally do with our risk warning. But before we do, just to let you know, we will be observing our main 15 liquid global markets, plus any other markets you would like us to look at towards the end of the webinar, obviously time permitting. Okay, so without further ado, let's start with a risk warning. Please make sure that you are always aware of the risks that are involved in trading the financial markets. Yes, we are acutely aware of our necessity to be able to protect our own capital, and we do so in a very, very specific way. But please do take a quick moment to read through our risk warning. Okay, so what is the importance of time frame analysis? We've identified a number of reasons. Firstly, you can see more clearly what is happening and who is genuinely in control of the market. If you can decide on that, you will put yourself in a great position to be able to make consistent decisions. Point number two is that the larger the time frame, the more important the genuine level of support and resistance becomes. That's very useful because it will give you confidence in the trades that you take. And thirdly, it can show you the important levels where a market is likely to move to also. So that's why we spend a bit of time every Sunday looking at multi-time frame analysis. Okay, so let's go straight into the charts. So we're going to start, as we always do, with the dollar index. Now it's been an interesting week, largely kind of moving sideways, looking or threatening to look like it was looking bearish for a majority of the week until Friday. We all know we posted in Facebook some of the response to Friday afternoon's non-farm payroll. And as you can see, there was a bit of a sell-off and it reversed pretty quickly and we ended up finishing the day and ultimately the week actually stronger than when we started it. However, from last week's major levels, we were looking at this weekly high of 95.03, and this is the level that we now need this market to be driving through. And if that occurs, obviously the first level was the head and shoulders, the inverted head and shoulders pattern, where we identify this level in around here. Notice it was exactly where the Friday's low is exactly in line with these highs. So, and that's the importance of identifying these kinds of levels. What I'll do is I'll just stick a line in there for you all, and let me change the color of this line so it doesn't become so confusing. So you just have that level in there, and what I'll do is I'll just bring it up just a tad, and it's virtually the price at which this market rebounded and started driving higher, which is the 9,400 level effectively. So we've actually been looking to buy the dollar since kind of early mid-September. We got the initial structural break to the upside, which is the first stage that we need to see in a potentially bullish market. However, we started seeing multiple structural failures to the upside, and of course the nice symmetrical pattern that you're currently seeing on screen, which is a couple of shoulders and a nice big head down here. So and we're seeing a confirmed break above that with momentum, which is so important to identify the momentum in these markets. Welcome guys, thank you very much for joining us. So this is the dollar index. This is our basic principle that we're looking for opportunities to buy the dollar index. At the moment, we're in a number of dollar-related trades already, and we're going to look to keep adding to those until price tells us otherwise. So that is the dollar index. We've got our head and shoulders in the euro dollar, as it does make up the majority of the dollar index in itself. So that's why you see symmetrical price action, obviously inverted. So so here is now our head and shoulders, and we've seen the confirmed break with momentum. Let me get up my my pen ever so briefly so I can identify this for you. So this is the structural break of the head and shoulder level, where you have the shoulders on both sides, nice and symmetrical, and you got a nice big head at the top. So this is just classic price action. Once we identify and we see the momentum come into the markets, it's then all opportunities to look to sell this market. Now we currently sold this market back up here. We've got into this trade a few times now. We've made some money on the way down, so we were able to book in a bit of profit to here, and obviously we had a good 4 weeks or so of a little bit of consolidation, but it kind of lent to our general idea of a head and shoulders bit of price action, and then we get the confirmed break that we're looking for. So now really, in terms of a directional bias, our directional bias is to the downside, and it has been since September, early September time, and I know many of you have always taken those trades as well. So we are still in this trade. This trade is still running. We have a stop loss placed above these highs. Very, very important to protect your capital at all times. And now we're in the position where we could actually be looking to, if we get a break of this low, we then have a more recent structural high, and it looks like then we'll be able to take a nice big jump and book in some nice considerable profit on this trade. So fairly straightforward, nothing too complicated there, hopefully. And Friday's candlestick is very bearish, as you can see, and we're looking for continuation now. Okay, so let's take that little bit of knowledge and understanding about the dollar index and the euro dollar, and let's look at these levels on a weekly time frame. So we were looking for opportunities to sell this market, and we had the low at the 1573 level, which is last week's low, but it's very important. This is quite a bearish weekly candlestick, but we do need to see continuation to the downside. So we need to break this daily low, this weekly low, should I say, for last week's trading and the week before, ultimately breaking the 1573 level. We would then expect to see continuation, firstly to the 1450 level, just in here, and then secondly potentially even further down to the 112, 113 level. So a nice big, very technical move here in the euro dollar. And it actually has a little bit of fundamentals rowing in behind it. So that always provides you with a little bit more confidence in the trades that we take. So working with these levels, that is a weekly and a monthly low as well. So we're looking for opportunities to buy that. So we're going to stick with that level. The 1573 would represent extra opportunities, not just in the euro dollar, but we have the equivalent in the dollar index, except it's the 95.03. So if we look at that at the weekly, it's the weekly high and the monthly high. So we would just literally expect continuation and a nice explosive move over the coming weeks in the dollar index. So that is the potential approach. Okay, so let's have a look at the pound dollar. We've clearly got defined levels to the downside and to the upside in this market. And these levels, if you look at them on a weekly time frame, they're actually the levels of previous weeks, the highs and the lows. So although we've had 3 bearish weeks, that bit of price actions occurred within those highs and lows. So what that says to us, if we're approaching to trade this market, is, you know, we're clearly in this sort of consolidation pattern, and we have, as you can see up on screen, we have this little bit of an ascending line that's supporting prices at every opportunity around that level. So we're entering a key phase, and having just discussed the dollar index and the euro dollar, we could get support around this level. However, if we get a kind of a structural break beneath the 30.26, then we'll get this price action rolling over to the downside, and it could present a fantastic opportunity for us as traders. And don't forget the price action which has come before it, which has seen this market, you know, continue to roll over to the downside. So with that in mind, we're still working with these weekly lows. So we have the 30.26 to the downside and the 33.36 to the upside. So that is going to stay put for now. But we're really looking to sell to get a break of the ascending line and to look to sell this market again around the 30.26 level. So a couple of important levels in a number of these dollar-related markets, and we're very close to a lot of those levels as well. So the dollar yen then, we have these highs. We have the 114.44, and we have the weekly low of the 112.95 as well. So it's interesting. There's only 2 pips difference between the highs and the lows of the 2 weeks daily candlestick. Weekly time frames we are now. So that's significant. It's also significant because we can identify it as a clearly defined level of resistance in this market. And if I take you back, we were looking at the 1300 level, where we got a break, very clearly defined break to the upside in this market. Clearly defined breakout to the upside. But we suggested that there was very little point trading between, you know, this level and that level, just because of the nature of the 114.44 level. And that's what we've seen since, is just a sideways moving market. However, if we get a break above the 114.44, clearly defined opportunity to buy this market. And if we get a confirmed break below the 112.95, a clearly defined opportunity to sell this market. So we absolutely have, we don't mind which way this market goes. We've got a clearly defined approach to risk management. So we don't care if this market rolls to the downside or starts to increase to the upside. Now, our bias would be to the upside. And the reason for that is the fact that this is such a structural level. And let me take it over to the weekly time frame. So we're currently, now we can go back to the daily actually, looking at this. Sorry. So what we're seeing, let me come out just a little bit more. So what we're seeing is, if we take these recent highs and recent lows, as you can see in here, we're currently sort of 50%. So we're currently at the 50% mark. Just meaning there's plenty of opportunity if we get a break above this level. There's plenty of opportunity and plenty of space for this market to start squeezing higher. So it could just represent a very, very interesting opportunity to the upside. Okay, so that's a little bit about the dollar yen. So looking at the weekly levels, we're going to continue to stick with those levels to the upside and to the downside. So 114.44 and the 112.95. So we're going to keep a close eye on those. Taking that dollar-related information to the Aussie dollar. Again, a lot of these markets are very, very close to significant levels. We're currently selling this market. So when we get a break of the 76.24 level, obviously, if we get a break of the 76.24, we'd expect a continuation to the downside, at which point we can mitigate 50% of risk on that trade. So looking at the weekly levels, which also coincide with monthly levels, as you can see there, we're still going to work with this price action and continue to sell beneath last month's low, which is this level in here, the 76.24. And as you can see, there's a little bit of a rejection in this monthly candlestick. So if we get a break of that, it could be a really interesting squeeze to the downside. So those are the levels we're going to work with, the weekly and monthly levels in the Aussie dollar. So we're talking about the 76.24 could represent a really interesting opportunity to take this market to the downside. So the dollar CAD, these are the weekly levels in the dollar CAD. So if I take you back, we've identified a couple of structural failures to the upside, which meant we were able to get into a couple of winning profitable trades. As you can see, the price action. We did have a take profit in this market around this level up here. Unfortunately, we had a bit of resistance around this weekly high, so we didn't actually get the break above that weekly high. We brought our stop loss right the way up going into Friday's price action, Thursdays and Fridays price action, and obviously we've had this little rollover to the downside on Friday. No surprise, but we've booked in a bit of profit on that trade. So we've had one profitable trade and two profitable trades. So far, so good. The opportunity for us is to continue to look to buy this market. So wherever it decides to fall back to, if we get an opportunity at those levels, we're just going to look to take this market higher. So we have our directional bias already in play. So nothing else, we don't need to really concern ourselves with much else until we get structural failures to the downside, unless price action tells us otherwise. So we're just looking for opportunities to buy the dollar CAD. So that's the dollar CAD. So the euro pound now, let's take you back to the daily time frame. So we had a weekly low and a weekly high. So let me take you to those levels. So we had a break to the downside, which made a new low actually in the euro pound, should I say. And we've had this, these are the new levels actually, which I just put into the market. So we're talking about the 89.37 to the upside and the 87.32 to the downside. But before I do that, let me show you why it's important to take a step back and try to work out and understand what's going on with these markets. Because what we're seeing in this is a market that made a new low, followed by a bit of a rejection of that low, followed by a high. So a little bit of a structural sort of move to the upside, which is followed by a rejection, which squeezed lower and made new lows. And then sort of making a double top before we get a brand new low in this market, followed by a pretty significant pullback. So if you're trading these on an intraday basis, you're probably getting chopped all over the place. Very, very difficult. But what we do, and I suppose it's a unique aspect to the way we trade the financial markets, is we want to take a step back, try to work out right, what is happening with this market? So when we look at this monthly time frame, we can see a pretty major sell-off there in August, and very little continuation to the downside. So what this chart suggests to us is that if we get a break above the 89.37, it looks like we could be experiencing a new leg to the upside. May be somewhat short-lived depending on the nature of these this high up here, followed by a lower high, which is the beginning of a reversal in this market. So that's why this level is so important to the downside. Would constitute a nice sell, but a break above this could constitute a little squeeze higher for a period. So we'll obviously trade what we see, and that is the euro pound. So taking that over to the euro yen, and let me show you the sideways moving price action. We were looking at this level to sell this market, the 131.44. We got close to it last week before a bit of buying pressure came into this market, and all this is a reversal. Sorry, is a pullback, and now it looks like we're getting a bit of selling pressure coming in. But because this market is clearly consolidating, we're getting this price action. It's moving sideways. We want to wait until we get a confirmed break before we sell it, or a confirmed break of the high before we look to buy it. So that's our approach. So that is the euro yen. So the S&P 500. So we have been making new highs over the last. Just going back to the euro yen just briefly. The levels to the upside then are the 134.48, and to the downside is 131.44. And they coincide with weekly and monthly levels as well. So just there are some significant importance. Okay, so we're seeing a little bit of volatility, start to creep into some of these markets, and we're getting new all-time highs as well, which is no major surprise. The only surprise is the difficulty in trying to trade these. There's the vast majority of retail traders are obviously sitting out on the sidelines. So you're getting these markets driving to the upside on the more institutional side, with less number of individuals trading these markets. But we do have an approach which is looking to potentially buy the dips, but the dips are pretty feeble and pretty pathetic across the board. So just for consistency purposes, we're going to work with these highs. So we're going to work with the 25.85 level in here, 25.85 to the upside, and let's take this in. So just for consistency purposes, we'll work with the weekly low. You can see we're kind of firmly in the middle of this ascending channel. So let's take the low, the 25.62. So we'll bring up the low price. It's 25.62. So those are the levels there. Now we're not necessarily looking to sell these markets, and we're only looking to buy them if we get the kind of a primed opportunity, basically. So again, we'll go straight into these markets, look at these accelerating markets, and for consistency purposes, we'll just work with these highs and lows. So 23.49, put those levels in there. 23.49. And to the downside, we are working with the levels, the 23.26, 23.26. So those are the levels in there. Just regarding the Dow Jones, and all these markets are at all-time highs, which is pretty incredible. But again, we had a little bit of a significant piece of bullish price action, followed by a little bit of bearish price action there on Friday. But overall, in fact, the all-time high is just above this level, which is the 75.86. But a lot of that is to do with the weakness in the British pound. The pound sold off, so you're very likely to get a little bit of bullish price action in the FTSE 100 as a result. So again, we're going to work with these weekly highs and weekly lows in this market. So 75.49 to the upside. So 75.49 to the upside, and to the downside, we're working with the 74.23 level. So 74.23. So there you go. Those are the levels in there. Obviously, we won't be buying above 75.49 with a major level above the 75.86. We're looking for opportunities to buy the dips, but even those are make us feel very, very uncomfortable. And they coincide with the weekly and monthly levels as well. The NASDAQ is pretty incredible sort of bit of price action there in the NASDAQ. Not surprising in any way, shape or form. So let's work with these highs and lows again. So we're going to work with the high of this market, which is 62.96, an all-time high, 62.96. 62.96, and the low is the 61.92. 61.92. So we work with those lows. I think it's fairly safe to say if we get a bit of volatility to the downside in these equities, I think we're going to see a pretty extended move. But for now, we're just in this continual sort of drive to the upside. So that is the NASDAQ. So just regarding the gold market, it's very much a response to the dollar. It's inversely correlated with the US dollar. So again, some of these levels are just getting very close to significant levels. We have the weekly levels in there at 1260 to the downside and 1285 to the upside. So we're going to continue to stick with those. All we're getting is a bit of sideways moving price action, which is absolutely fine, and also coincides with the lows as well on a monthly time frame. So that's just the price action that we're currently trading. So I'm happy to stick with those for now. Regarding crude oil, which we are now into the upside. So we have our trade sitting in, we had our pending order sitting in this market, and it was taken out on Friday. So the bad news is it was towards the end of the trading day. So we're interested to see what the next week is going to bring regarding the crude oil is concerned. And the reason why we were trading this market to the upside is as a result of breaking these very, very significant highs. So it's the first break for the best part of 2.5 years, where we were last at this kind of price around here, and we're getting a break of all of this price action. Price action really grouped up there for a period of time towards the end of last year, and now we're getting prices. We've had many good sell trades and buy trades in this market, as this market has been moving very, very technically. We did have a pending order in this market to sell this market if we got a little bit of price action that was rejecting moves to the upside, but I'm sure you'd agree Friday's price action is pretty bullish. So we're actually quite happy to be in this trade to the upside. Let's see if we can get prices squeezing up to $60, and you'll probably experience and hear about it in the news over the coming week. But we are currently in this trade to the long side. So now we just wait and see what's happening. We're in this channel. This high, or should I say it's now a weekly high, could represent a little bit of selling coming in if it's the high of this ascending level, but we'll work with that in the short term. So looking at this weekly candlestick, we're going to look for continuation to the upside above the high. So I might need to put a new line into this market. So the high is 55.74, 55.74. And I'll place that in there. So 55.74. I'm going to change the color of it to our nice solid green, and you have that up there. And we actually have our stop loss beneath the weekly low, ironically, but I'll put a, in fact, we're going to be looking for opportunity. No, I'm going to put, no, I will actually put that level into that market. Oh, didn't need to go. So I'll just change this level in here. So we make a note of the low, which is the 73.74. Okay, so there's $2 exactly difference between the highs and the lows. Sorry, just bear with me, and we put this level in here for you. 374. So we have those levels to the upside and to the downside in the crude oil. And we'll just finish up now, guys. Appreciate we're coming to the top of the hour. So we'll just finish off with the 10-year note, the 10-year Treasury note. So we've had the weekly lows, which the market really struggled because we were looking for opportunities to sell this market. So we've clearly experiencing a pullback off these levels, which is all this is really to this point now. It could be significant that the market's been held up around the 125.30 level. So we have said if this market looks like it's going to be turning and take another roll to the downside, then what this market might do is give us a fantastic opportunity to sell it at a higher price. So let's see if that's the case. This market still has to work a little bit harder for us to get into it. On a weekly time frame, we're just getting quite a bit of bullish price action, as you can see from last week. So what we might get is a bit of consolidation over the course of this week, but we can only trade what we see. And this is why if you get confirmation on the bigger time frames, it can help you with a bit of a plan of action. Okay, so that is the 10-year note. So I'm just going to work with those levels. Just have a look at the chart on the monthly time frame. So you could see that this market has made a double bottom. It's been trying to push to the upside. We've had a bit of price action come off, and now this is our first month of a bit of bullish price action since we had the sell-off and the new highs. So this could be the beginning of the next leg to the upside. So we need to just watch this market sort of very, very carefully. So for this one, I'm actually going to work with the highs and the lows of the monthly level, which is to the upside is 125.38. 125.38. 38. There you go. So that's the level to the upside, and we're actually going to work with this new level to the downside, which again is a monthly level, so it does have significance. 124.70. 124.70. So those are the monthly levels in there regarding the 10-year note. Okay, guys. So apologies for the sort of brief disruptions there with the connection, but it's unusual. We've never experienced that before. So apologies for that. So that just about concludes tonight's webinar. You're very welcome to follow us on Facebook, YouTube, Twitter, and LinkedIn. The details are there up on the screen, and subscribe and like, as you wish. That will be great. So you're welcome to follow us on social media, and we're very happy to take some questions from you guys. Appreciate we've gone over the top of the hour, which is a bit unusual for us. But any questions, perhaps brief questions, perhaps, or is there any markets that you'd like us to look at? I'm very happy to cast our eye over any other markets you might happen to be looking at. So feel free to type any questions you may have into your chat box in the right-hand corner of your screen. And if you'd prefer to email us privately, you're very welcome to do so as well at support@TheLiveTradeRoom.com. Okay, so let me have a look through. So let me see. Yeah, I apologize for that, guys. Obviously the connection went down. So what happened was I was talking and talking you through it and obviously sharing my screen with you, but that wasn't the case as far as you guys were concerned. So let me see. So Porsche, you're saying the Euro CAD, you're looking to sell that particular market. So let's get in and have a look at the Euro CAD. Let me slide this across. So let's have a look at the Euro CAD here, if I can find it. Okay, and let me slide this across. Okay, so you're looking for an opportunity to sell Porsche. Let's do a little bit of price action analysis on this. So, you know, we zoom out, we look for these levels. We don't have to be incredibly accurate, because all they do is indicate to us what could potentially be the options are when we if we're looking at these sorts of price points. We just need a heads up in terms of what are the potential levels of support and resistance in this market. So let me see if there's anything else. So, and we're looking for sort of major highs and lows. I suppose there is another one in here. So let's work with that. And let's now zoom in. So what we've had is this market move up to the 51.32. And we've clearly seen a pretty significant rejection of that level. So let's see how significant this level is, which is the 51. It's the middle level. So it is a fairly significant level. So yeah, so what we're getting, so there's a couple of observations I can just make at this point. And that's the first one, is that we've clearly got this potential bit of channel price action. I do want to see whether this market yeah, okay. So, I mean, you'd have to look at this and say, you know, give or take, we're largely pretty range bound over the last, you know, 2 years, 2.5 years potentially. So, you know, with that in mind, you've got to obviously be very careful. Now, you are absolutely right. You know, you've had a clearly defined rejection of this market on a daily time frame, and now you've had your little pullback off that level, so it created a lower high. So, so you've had the key sort of confirmation, you know, the structural failure to the downside in this. So you're quite right to be of I suppose, a bearish. Have a bearish bias in this market, more so around the 48.83. Now, the only sort of little bit of concern would be the 147.89. We want to see how price reacts around this kind of level, give or take a bit of price action, and make your decisions off the back of that. Now, this ascending line has the ability to kind of hold up a bit of price action. So you might just want to exercise a little bit of patience. I'd be fascinated to see what the next couple of days would bring regarding the Euro CAD. So just really define your stop loss, and you know, don't give this market that much scope, because you can get explosive moves to the upside followed by explosive moves to the downside. So by all means, you know, it's obviously up to yourself if you decide to take the trade. Just be very accurate with your risk management, and there could be a very, very interesting sort of move back down to test the 144.56. So it definitely has, you know, risk reward. It definitely has, you know, the structural failure to the downside, the bounce off the 150, the rejection of price action to the upside. So it has a number of elements going to it. It just has this level in and around the low. So just be mindful of that, plus just the visual kind of level. So what we might see over the next day or two is a little bit of bullish price action come into this market. And even it might be worth considering that to allow the little bit of price action to come into it. And if you get a little bit of exhaustion whatever price that is, you might be able to sell it from a slightly higher price. So that would certainly be, you know, kind of our outlook on that particular trade. Okay, guys. So I hope that was just a little bit useful to you, Portia. So yeah, look, I can see, guys, that many of you seem to be heading off, which is absolutely fine. Just to let you know, this webinar has been recorded and it will be placed in your members login area so you can access it whenever you like. Yeah, apologies for the delays this evening. So very unusual, but I suppose that's the nature of live webinars. So in that case, I'll let you go for the evening. Thank you very much for joining us. Do take care. We look forward to seeing you during the week so we can really fine tune these potential trades and there's a number of them in the pipeline. So we should be in for definitely an interesting few weeks. So from everyone here, my pleasure, Portia. Pleased to be of some assistance in that. So from everyone here at the Live Trade Room, thanks very much. Do take care and bye for now.